All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin in the crypto markets. Okay, guys, so over the weekend, Bitcoin actually did pump, and we were actually able to reclaim our pitchfork and find reacceptance back within our pitchfork, which is one of the bullish signs that we were looking for in order for Bitcoin to get a bigger recovery to take out last weekend's highs here, last Sunday's highs. And on Saturday, we did get back inside that pitchfork and we kind of got back inside, back tested the VWAP in the bottom of the pitchfork, and we continued up. I did post about this in the Telegram community on Saturday mornings, around Saturday mid morning for me. I did say, guys, we're re entering back within the pitchfork. We're trying to find reacceptance. And if we do, I expect us to come take out those highs from around 116K. And if we go ahead and pull a horizontal ray, you can see today we did come up and we did swing fail pattern the highs into our pitchfork band. And one of the things that I talked about on Friday's live stream, that if we could find reacceptance back inside of this pitchfork, then we had a high likelihood of coming up, even possibly to come up to the pitchfork band to take out those weekend highs, because weekend highs often get taken out. And we did come up there, we did take out those highs. That was a nice TP area and a nice possible scalp short position. If you did manage to catch that position a short, then I would stay in that short for now, and I would be taking some profit right now on that short position because we are coming down into our anchored VWAPs, which was acting as resistance earlier and now is going to be acting as support. Now, I do think overall Bitcoin, also, guys, we were seeing some bear divs as we were coming up to that swing failure pattern and to the top of the pitchfork band. This is our lower pitchfork band. We came up to the top of the lower pitchfork band with some confirmed bear divs on the chart. You can see NAMI here had confirmed bear divs and confirmed money flow bear divs. And I've talked about this many times on my channel, but when Market Cipher B has confirmed momentum bear divs and NAMI has confirmed momentum and money flow bear divs, that's a really good signal to at least look for a possible entry on a trade for me. That's for me personally. So we did see that trade play out with the swing failure pattern, and now we're kind of just seeing this three-wave corrective move down. But overall, I do think more upside is likely locally based on what we are seeing from last Wednesday's low. So this low here where we reclaimed our anchored VWAP. We saw a swing failure pattern of an intraday low. You can see this intraday low swing failed here. And then we were able to get back above the key anchored VWAP. Now, this is a high time frame anchored VWAP from 74K lows. And really, that was our first sign of strength. If we were able to reclaim that VWAP and flip it to support, then we were expecting to next tackle that 111 to 112K area, where if we could reclaim that, flip it to support, we could work our way up to take out the weekend highs from a couple weekends ago, from Sunday, October 12th. We've done that now. But if we look at from last Wednesday's low, I do think we're in an impulse here from last Wednesday's low, and we could be looking at a multiple 1-2. So you have your 1-2, 1-2, 1-2. All of this here is a third wave for me, and we could now be coming into our 4-5s, 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 coming up possibly even to 117.5 or even up to 122K, 121.8. So for me, I do expect higher. And also, if we look at this impulse here, this triple 1-2 impulse, 1-2, 1-2, 1-2, we're in our third wave. So if we take a Fibonacci from the lows of our third wave to the highs of our third wave that we made earlier today, we have a couple levels to look at for a wave 4 bounce, because we know we're looking for now 4-5s within this impulsive wave here. This impulsive wave could end at 117.6, or it could maybe come all the way up to 121K, 121.5 ish. And so if we look at that fourth wave corrective move, we want to see a three wave corrective move either bouncing from our 382 or that three wave corrective move bouncing from our 0.5. And we have some confluence here. Not only do we have our two anchored VWAPs here that and the 382 that we're trying to bounce from right now upon the daily close, but even if we drop a little bit lower to our 0.5, you can see we really have our very key anchored VWAP from the all-time highs. From our current anchored VWAP from the all-time highs. Let me go ahead and just turn that on. you can see that anchored VWAP from the all-time highs is coming in at around that 0.5, around 113K. So yes, it is possible we can drop a little bit lower. Now, if we turn on the golden pocket from the lows of wave 3 to the highs of wave 3, we turn on that golden pocket. If we do come down to about 112,279 to about 112,000, that would invalidate our local impulse from last Wednesday. So we do not want to drop down that far. Now, if we do drop down that far, there's still a probability of at least a bounce there because it is near the bottom of our pitchfork. And we really haven't back tested that pitchfork since we've re-entered it. We haven't back tested the bottom of it. And oftentimes, if you reject from the lower band of a pitchfork, you will see a drop eventually to come back and back test that pitchfork bottom to see if we're going to maintain structure and find acceptance back within that pitchfork. So that is something that I will be looking for. But if we do bounce, if we do drop that low to about 112K and bounce, I will look for a long from there, but I will be taking profit at the local golden pocket. So we'll pull a theoretical fib. Now, guys, this is completely theoretical right now. Just we're playing around based off some Elliott wave theory. But if we pull it from today's highs, and let's just put it right on that golden pocket area there, golden pocket area, you can see that our now current golden pocket would be very close to our pitchfork band. So what I would expect is if we do retrace that far, bounce from 112K, I would be expecting a rise up to backtest generally the golden pocket lower band, again, the bottom of the lower band, and then we could get a bigger move to the downside. But right now, I am locally bullish on Bitcoin. I am expecting a little bit of a bounce, actually, possibly from where we're bouncing from right now on today's daily close, because we do have two key anchored VWAPs there, and we do have that 0.382 Fibonacci that I just showed you guys if we pull it from the lows of wave 3 to the highs of wave 3. And we look at that local, those fourth wave targets. Oop, let me make sure that's on there. You can see that we are bouncing perfectly from that 0.382 as we speak right now. And now we are looking if this impulse is going to continue to play out from last Wednesday's lows, because we had 3 1-2s in here, 1 2 1 2 1 2. Now we're going to be looking for 3 4 5. So a 4, a new high, and a 5, 4 5 4 5, potentially coming up. We have a couple resistances above where I'm interested in this ending locally. So if we turn on our resistance boxes above, we have a couple of them. Let me go ahead and delete this one now. This was an old one that we were working on reclaiming over the weekend. We have now done that, so we can get rid of that box. But above us, between 117, let's say 117.550 and 118.3, 18.2 is our next major resistance. And this is a major resistance. Now, actually, before I go into that, though, let me go ahead and turn on our volume profile. This volume profile is of all the price action after the giant crash happened a couple Fridays ago. And another reason why we're bouncing here right now, not only is it our local 382 Fibonacci, our two key anchored VWAPs of support, a support resistance flip locally for today. You can see Sunday, actually it was Sunday resistance, Monday support, but it is the value area high on Coinbase of our range that has been in play since the ending of the big crash to the downside. So now that we have today been able to, yesterday we had that small rejection from the value area high, came down, we were able to hold the VWAPs and now push above it to the upper band. We are seeing that 3-wave corrective move right now to backtest the breakout of our volume profile. And if we can hold local support right now at this 382, at this value area high, at these key anchored VWAPs, then we can expect the impulse to continue. So for me, this is kind of the local support area where you do want to see a bounce from. And now if we see this bounce, we're expecting 3 more highs locally. 1 more local high, 2 more local highs, and possibly 3 more local highs to come up either to 117 to 118, 117.5 to 118.3, or these 4 5s could even continue to break us up to that 121.3K level where the pitchfork midline is. Now, as far as pitchfork trading goes, we do know that if we can break this lower band of the pitchfork, then we can flip it to support, and we have a high likelihood of continuing to our pitchfork midline. So that is a reason why I'm looking possibly above this 117.6 resistance. But let's go ahead and turn off our local volume profile, and let's turn on our volume profile over the last 3 months. And let's zoom out to our 4-hour chart. So on the 4-hour chart, this next purple box of resistance between 117.6 and 118.3 is a resistance, because if we pull a Fibonacci from the highs of the move, in this case the all-time high, to the lows of our move that happened over the past few weeks, and we turn on that golden pocket, you can see that golden pocket is going to be coming in exactly at our point of control of our 3-month long range at about 117.6. So that is definitely an area where we could see this entire push up from the lows stall out, and we can start to crash back down if the impulse since last Wednesday ends there. This impulse here from last Wednesday ends there. But if we can reclaim that, maybe reject from this area, back test the pitchfork band, hold the pitchfork band as support, then I do expect us to continue pushing up to our pitchfork midline, creating those last 4 5s in here where we had our 1 2s kind of in here, and now we can create those 4 5s. So that's kind of what I would be looking for Bitcoin. If we do go in on our order flow charts and we look at our CVD and open interest, now I did warn about this on Friday's live stream. If we did see another prolonged drop in open interest here, we did see a pretty big drop in open interest. And, we have some drops in open interest here, which is concerning to me. But overall, technically, as far as textbook CVD absorption goes, bullish absorption, you can see from last Wednesday's low, we do have higher lows on the price action. We do have lower lows on the CVD, pretty consistent lower lows. So already right there, that's bullish CVD divergences. But if we look at our open interest from that low, our open interest is pretty steadily increasing. And this is a textbook bullish CVD absorption, which means locally we should continue this impulse to the upside. We have a higher probability of continuing this impulse to the upside to at least that 117.6K area. Once again, I don't like these prolonged drops in open interest in here. You would rather not see these in order to see that really nice fluid bullish absorption. And we are seeing that 4 times within this rise. But for now, because we are seeing bullish CVD absorption as far as textbook absorption goes, I am going to be keeping my bias locally to be bullish for new highs to be coming in. And also, we are holding, as of now, the value area high of our local range. So let me go ahead and turn off that 3-month range again. And we will put that local range from pretty much from Friday, October 10th, all the way until today. So a couple weeks here. We are breaking out of the value area high of the range, and we're in the process of back testing it now after taking the highs from a weekend high. So we expected a pullback after taking weekend highs out, top of the pitchfork band. Now, if we can hold this local support, I expect more upside to continue. But other than that, Bitcoin is getting that rise that we wanted to. Another thing that I pointed out to you guys on Friday's live stream is if we go into these VWAP bands, and I was telling you guys last Friday when we were in here that we were expecting a bit of a big move, not in there, in this area here, a bit of a big move to the upside, because what we see is when these VWAP bands squeeze close together, they act very similar to Bollinger Bands. Once they start squeezing tighter and tighter, you can expect a pretty volatile move to happen. And you can see now these VWAP bands are starting to expand here. And we did get that nice move to the upside over the weekend. And the fact that these bands are still expanding means this movement to the upside could continue pushing higher. And these bands could keep expanding for a little bit longer. So I like what we're seeing here for Bitcoin. I actually am interested in looking to add to my long position from this area that we're trying to bounce from right now. I have not added to it yet. Another thing that I want to say about on Saturday, when we were able to get back above this pitchfork that was acting as resistance, you can see we kind of back tested the POC of the range as well. And now we had a high likelihood to continue at least up to value area high. And we even broke that today, breaking up and taking out those weekend highs. We are not seeing any local bear divs, no bear divs on the 4-hour chart. We do have higher highs on the price action, higher highs on the momentum waves for market cipher B. But on NAMI, we are seeing some bear divs from Friday's high from last Friday, 3 days ago, to the high that we just made today. We are seeing those bear divs on NAMI, and NAMI is quicker on the confirmation of these bear divs. So just be aware that these 4-hour bear divs, if we fall back inside our volume profile, I will be expecting that move at least down to 112K, where that local golden pocket was. But if that fails, then we can probably expect to fall back down to the value area low again. If we pull a Fibonacci from the lows of this entire move from Friday, October 17th until today's highs, you can see the golden pocket is going to be coming in around the value area low of this 2-week long range. So this would be an area to look for at least a scalp long position. But if we do reject right now from where we're at after taking the liquidity, it could just be that this range after the crash is going to continue to develop here, and we could chop around in this range for a couple more weeks. A sideways range. After seeing such a volatile crash in the market, we often see this holding pattern where the market's kind of in a stasis waiting for macroeconomic decisions to be made. We know we have FOMC coming up later on this week. So some pretty important decisions. And let me just say, I wouldn't be surprised if we do reject here and we fall all the way back down to 108K. But if we do come down to 108K, I will be looking for a long position. Long position from this area. Probably my stop would be going below the lows from last Wednesday. And I would be targeting at least the value area high of the range. That's still a 3.6 risk reward ratio. Because if we're going to bounce from the value area low, then we have probably a high likelihood to continue just chopping around within this range and at least come up to the value area high of the range. So we'll kind of diagnose that as more data develops throughout the weeks. But that's really all that I'm looking at on Bitcoin. Let's look at the liquidation real quick here. You can see that we do have, if we look at our Model 3 heat map, we do have some pretty strong liquidity coming down to about 106K, actually 105K. And that is a little bit concerning that we do have that liquidity down there. If we go onto our Model 2 heat map and we look at the last week of price action here from our Model 2 heat map, yeah, we've taken out all the local liquidity to the upside. We took that out. But let's look at the 2-week heat map here as well, and we can see if that liquidity is also on this heat map. Okay, so yeah, took out our local liquidity to the upside today. Now that we've taken out that liquidity, of course we took it out because we had the swing failure pattern of the weekend highs. That means those positions were stopped out, and now we are seeing a little bit of a retracement here. But I really don't want to lose 108K again. If we lose the value area low and macro golden pocket of this entire push up here, to me, that is going to be somewhat of a bearish sign, and it could mean that we are going to continue the overall bearish sentiment push down. But because we did break these highs, even though it was only a swing failure pattern, because we broke the highs from October 12th, from a couple Sundays ago, now we have considered this possibly a bullish market structure break. Even though it was only a liquidity grab, we could consider a bullish market structure break by taking out those highs. Now we have a higher probability to form a higher low and to continue pushing higher. Or even if we come down to 108K, a higher low and continue pushing higher here. We'll have to see how this plays out as the data develops over the week. If we go into our Forex calendar here, let me go ahead and look at this current week of news. We do have, okay, where was it here? Yeah, FOMC is going to be this Wednesday. So this Wednesday, 11 o'clock a.m. my time, federal funds rate, FOMC statement. And then, of course, we do Yeah, no other real high impact news for the United States. Of course, there is other high impact news for other countries. Japan has some high impact news in here, but that's what I'll be looking at on Wednesday. And if we do reverse here, we could see that drop to 108K by Wednesday. If it's bullish news, we could bounce. We'll just have to see how this plays out. But anyways, that's it for Bitcoin. Before we go on to some of the altcoins, I want to take a second to shout out the partners of the channel. So the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit some of the larger amounts into the exchange. They're offering some of the best initial deposit bonuses in the game. If you deposit just $100, you can get a 50% deposit bonus. That is the highest deposit bonus for a $100 deposit in the game. And then offering various 10 to 20% deposit bonuses. They're also offering up to $8,100 in futures trading bonuses, depending on how much you trade in the futures markets. And I have partnered with BYDFI to create a Telegram community where I do post these trade setups and my analysis, my thoughts on the market ahead of time. Like this Saturday when I posted that we were reclaiming the pitchfork and we had a high probability of moving up after we reclaim the pitchfork, a high probability of moving up to the upper band, to the pitchfork band here. So if you want to get that analysis, if you want to get access to that Telegram community, all you have to do, it's free. You just have to sign up with BYDFI using my affiliate link in the description. You have to deposit $100 into that account. That is your money to trade with. You will get the bonus. You will get the discounts on trading fees. And then once you've done that, click the Telegram link in the description of this video, type in /verify, and then your user ID, which will be right up here. And that'll get you access to that Telegram community. And once you're into that Telegram community, you're in. So if you're interested in that, that is BYDFI. Also, BYDFI is doing a new campaign that is going to be starting in November. And this is really, really interesting campaign for me. Let's go ahead and I will talk to you guys about this campaign. So BYDFI will provide 2K USDT or bonus as the initial pool. So we're going to be doing this pool, trading pool. Then for every 1 million community volume, and that does include leverage, that, 1 million in community volume, they will add $100 of the prize. The event will be running for 1 month, so through the month of November, and the top 5 volume traders will get 80% of the total prize. The 20% left will randomly distribute amongst other traders. This is a community celebration for me hitting 3K subscribers and just my affiliates with BYDFI, the partnership. So if you guys are interested in joining BYDFI right now, there's going to be a really good kind of bonus celebration here where you guys can earn money just by trading on the exchange. And the more volume you move, the higher probability you do have to win that 80% of the prize money, or even to win the 20% that is going to be randomly distributed to the other traders that are trading here. So I think that's really cool that BYDFI is doing this. They're only doing this in the celebration of me hitting 3K subscribers on YouTube. It looks like the campaign is going to be launching possibly November 5th. So if you guys want to get into that trading bonus there, go ahead and register by November 5th, and that'll get you in there. Okay, the next partner of the channel is NAMI Trading. And NAMI is this momentum and money flow indicator on the bottom here that I use for confirmations. And you can see NAMI's been very, very helpful for me in diagnosing whether to enter or exit a trade, whether to stay in a trade or take some profit. And so if you're interested in purchasing NAMI here, they are offering 50% off for my affiliate users only. So if you click the link in the description of this video, and then the discount code Divine50 is also in the description of this video, you can get 50% off lifetime subscription to NAMI. For me, it has been an invaluable tool to help me with entering and exiting trades. And it's really helpful. So NAMI, both links are in the description, link in the discount code. And then lastly, the last 2 partners of the channel are MEXC and Bybit, both great reputable exchanges with low fees. They are offering futures trading bonuses if you do sign up using my affiliate links, and they're offering some really great initial deposit bonuses as well. All right, let's get back to the TA here. Let's go on to Ethereum. Now, guys, on Ethereum, we are still kind of just ranging within this range as well. You can see that since the big crash, we have a range that we're looking at. And Ethereum is just kind of ranging as well as Bitcoin, attempting to break out of the value area high of the range. But unlike Bitcoin, Ethereum kind of broke out of the value area high. We did not take out those highs of the range, unlike Bitcoin, which did take out the highs of the range here. Bitcoin SFP the highs today, breaking local market structure. Ethereum front ran the highs of the range, and now we are falling back inside of our volume profile. So a little bit less bullish for me on Ethereum. But if we zoom into the 1 hour chart, we were seeing the bear divs on the chart as we were coming up to that area. I do believe there was a daily. Let's just go ahead and zoom out to the daily. Yeah, it was a daily level that we rejected from earlier today. So if I go ahead and just throw that daily level, I deleted it because we hit into it, but this was a daily level at 42.45, let's say. We are rejecting from a daily resistance, and you can see our daily candle did close below the value area low of our 3-month long range. So what Ethereum has been doing here, let me just go ahead and hide this range. After losing in the big crash, let's zoom into the 4 hour chart. After losing our 3-month long range, which is this range that goes all the way back to August 9th, we lost it in the big crash. We've been bouncing from a pitchfork band here, but we've been trying to re-enter and reestablish price action back within that upper volume profile, this upper volume profile here. And we have not, on today's push to the upside, we did reject from the daily level. And on our daily candle, let's now zoom back out to the daily chart. On our daily candle, we closed our daily candle. You can see we just wicked above, but we were not able to re-enter back within that volume profile after seeing this range develop underneath the volume profile of the past couple of weeks since the crash happened. So in order for Ethereum to kind of become bullish here, I do want to see us reclaim and start to close daily candles above the value area low at about 4160. If we can get above 4160, I do think we will continue pushing up, potentially seeing that last impulse, because the larger count on the larger Elliott wave count on Ethereum. I am expecting new all-time highs based off of this 5-wave impulse. A wave 1 here, a wave 2, a wave 3 taking out the prior all-time highs. A wave 4 came right back to backtest that 4-year long range value area high and our 0.5 Fibonacci wave 4 target. And now we could see a potential wave 5 pushing up to 5,800, 6,000, or even potentially even higher. So that is kind of my overall macro bias on Ethereum, is to make new all-time highs. But the thing is, we might not be done with this wave 4 correction yet that we've been seeing the past couple of months here. And because we did front run, I talked about this on Friday's live stream, because we did front run a key weekly support level at 34.97, and because we did front run a key naked daily point of control right in that general area here, I wouldn't be surprised if we do end up rejecting the backtest of this value area low right now and even come down to take out those crash lows, seeing a swing failure pattern of the crash lows into that weekly and naked daily point of control before starting the bigger impulse up to make new all-time highs. So overall, bullish on Ethereum, but not quite sure yet if the wave 4 correction that we've been seeing in here is done yet, and if we're going to get that impulse starting now. Now, if we do start to break back inside of this volume profile of the past couple of months since August 10th, then I do think that we could say, hey, maybe there's a probability this impulse is about to start here. We also need to be aware as far as our range trading. So if we look at this range since the crash happened, we have our range in here. And the highs of the range I just spoke about that we had front run, they occurred on a Monday on Ethereum, not a weekend high like with Bitcoin, but we do have that Monday high coming in right around 42.95. And we see that our 3-month range point of control is also in that area. So we do need to be aware of one more local push up here to SFP into that POC. And then if we get that SFP, we could see a significant retracement on Ethereum from a confirmed swing failure pattern. So why don't we right now just go ahead and set an alert here on Ethereum on that high, and we'll look for an SFP short. But remember, we're only shorting if we confirm the SFP. That means a pierce above the level into your POC, and then a loss of the level. Once you lose that level, you can enter short. Stop would go above the wick, wherever that wick is going to be. And then I would be targeting at least your local golden pocket area of this move. So let's just pull it, a theoretical golden pocket here around 39.40-ish is an area I would be looking. And then if we turn on, now this is a completely theoretical golden pocket now, but if we turn on that range of the last couple of weeks, yeah, I guess let's pull the golden pocket down to the range lows. Yeah, if we pull our golden pocket down to the range lows, then you can see that golden pocket would be coming in right around that point of control area, $3,900, around $3,900 to $3,875. And that would be my TP area on this swing fail short. But that's all speculation right now because we have not come up to take out that high. We have not swing failed it. And locally, I do have to say, it's very similar to Bitcoin from last Wednesday's lows. We could be in that multiple 1-2 impulse as well. A 1-2, 1-2, 1-2. All of this is your third wave here. We could be seeing 4, 5, 4, 5, 4, 5, pushing up a little bit higher, not SFPing the range highs, but continuing to push up in the impulse. So that is something that we will have to look at as the week develops, as more price action develops here on Ethereum. We do have that weekly level that is coming in around 45.15, and that is another area where we could end this impulse. 1-2, 1-2, 1-2, 3, 4, 5, 4, 5, 4, 5 coming up here and ending that impulse around that weekly. If we pull a Fibonacci from the highs of the move around 47.59 down to the lows, now this is from the Coinbase low, you can see that our 786 is going to be right in that general area of the weekly. And oftentimes, altcoins will retrace to the 786 when Bitcoin rejects from a golden pocket. So local resistance, weekly level, new confirmed weekly level in confluence with that 786. Let's just throw that on the chart. This is going to be a weekly. And then if we turn on some of we have a daily level there as well. And no naked weeklies, no naked daily points of controls. Okay. Yeah, another area we did reject from. Actually, I believe, let me see. I just updated the chart. So I think that naked daily point of control was at 42.12 was just from today. Let's let this load up. Yeah. So that naked daily point of control was just from the close that happened 51 minutes ago. So we do have a fresh naked daily point of control at around 22.13, 22.12, but not paying too much attention to that guy. That is about it for Ethereum. Now, because we are rejecting, let me go ahead and hide this small 2-week long range. Because we are rejecting the value area low of our larger 3-month long range, there is a possibility that we could continue flushing down. And so just be aware of that, guys. Be aware that we could flush down to come test the pitchfork band again. And if we pull a Fibonacci from the crash lows to the, if we pull it to the range highs, the 786 we've already bounced from. So it's going to be less likely that we're going to bounce from that 786. But if we go ahead, now that Fibonacci's already been tested, we're going to pull it now from those lows on the bounce of the 786 up to our current highs that we made today. And you can see that now the current 786 is going to be right around that pitchfork band of support. And overall, we've been holding that pitchfork band. Yes, we have some wickage down below on lower time frames, but really on the daily time frame, you can see that this pitchfork band has kind of been holding us. And so because we have a 786 there now, locally, there is a possibility that once again, just like Bitcoin, this sideways range continues here, and we are going to come back down to the 786 before coming up to claim those highs. That would invalidate our local impulse to the upside, our local multiple 1-2 impulse to the upside. Remember, with this local multiple 1-2 impulse that I from last Wednesday, we do not want to break the golden pocket of wave 3. So if we pull a Fibonacci from the lows of wave 3 to the highs that we made today, which could be the end of wave 3, then that local golden pocket coming in around $4,000 would be an invalidation. And what we're looking at is the 5-wave count. We have a 1, 2, 3, 4, 5. So that could be your 5-wave, wave 3. After seeing your 1, 2, 1, 2, 1, 2, you get your wave 3. And now we want to see 4, 5, 4, 5, 4, 5. So if you hit 4K, you could see a bounce from 4K, but it would invalidate the impulse to the upside. And in that case, I would be expecting to come down to this $3,800 level. Local support level in here. Okay, that is it for Ethereum. Now let's move on to Solana. For Solana, guys, kind of the same thing. We're ranging within the range after the crash. But with Solana, we have a couple things that are a little bit different here. So Solana, its crash lows, we didn't see that giant wick like we did, at least on Coinbase, which is the charts I follow. We didn't see that real big giant wick like we did with Bitcoin, with Ethereum, with XRP, with some of the other coins. And we did front run after seeing that low. We came down on Friday, October 17th, and we got very close to swing fail pattern, to seeing a liquidity grab, excuse me, let me use proper language, to seeing a liquidity grab of those lows, but we front ran that liquidity grab. And to me, that was a bearish sign. But we are chopping around our pitchfork band, our larger bottoming pitchfork band, which is this pitchfork band in here. And we often do form ranges around these pitchfork bands. If we zoom out to the 4-hour chart, you can see, just like Ethereum, we're kind of chopping around and trying to hold this bottom band as support. And if we are now holding the bottom band as support, and we are getting back above the pitchfork band. So there is a possibility we could come up to the pitchfork midline. And if we look at our range highs since that crash, our dead cat bounce highs are our range highs of the past couple of weeks. We're looking at this range here. Then we could continue pushing up here locally to SFP those highs into your pitchfork midline, which would be around 212 to about 214 here, 212 to about 213, 214. So I am looking at a potential swing failure pattern, and let's just go ahead and set an alert here right now. We'll do SFP into midline. So if we do see a swing failure pattern of the range highs into that midline, I will look for a short position. But because we are reclaiming this pitchfork band, and also if we turn on that volume profile of that range of the past couple of weeks, you can see we are also breaking out of the value area high of the range today. And we're in the process right now, just like Bitcoin, of backtesting that value area high. If this local backtest holds, then I do expect us to come up and take out those range highs, where we then could see a bigger rejection if we see a confirmed swing failure pattern. So that is going to be a local resistance that I'm going to be looking at. And we will set a box there now, a box of resistance, just based solely alone off of the swing failure pattern into the pitchfork midline. That is a local resistance only if we get the confirmed swing failure pattern, guys. So please understand that. If we pierce above the level and stay above the level, I am not looking for a short. What I want to see is a pierce above the level into your resistance, being that pitchfork midline. And then if we lose the level, once you lose the level, you can enter short. Your stop is going to go above that high. And I would be targeting down near the bottom of the pitchfork band, which we could pull a golden pocket, and it would probably be right around your golden pocket area. That's speculative right now, and I know I've done some speculative golden pockets, but I don't want to confuse you guys too much. So we'll look at that. If that scenario happens, we can look at take profits for that. If we get above the pitchfork midline, we do have some resistance coming up here between 221 and 228 that we never got up to. If we turn on our levels, we have a weekly level up there. We have a daily level up there at 228. And then we have some naked weekly POCs at 221 and a naked daily POC at 221. So a couple areas of resistance within this box. To me, guys, because 221 has our naked daily and naked weekly POC, I would actually be looking for a rejection. If we do get above it, I would be looking for a rejection exactly from the bottom of the box where those volume levels are. And remember, volume levels are more important than time frame levels. I'd be looking for the rejection from like 221. But if we get above those volume resistances, then I would be looking for a potential rejection from the top of the box. So nothing really in the middle too much, except for this, we do have some internal liquidity here. And that is why I did keep this box ranging between 221 and 228. But that's the next resistance if we get above the swing failure pattern of the range highs into the pitchfork band around 214, 213. And right now, locally, we are holding the back test of the value area high, which is a bullish sign. Let me actually check this out before. Let me turn off some of these levels to clean up the chart. And I just saw we have some naked dailies. So let me turn on our naked dailies. And I know that I updated this chart. So let's see if that's a local naked daily point of control where we're at pretty much right now. Yeah. All right. So let's turn on our naked daily points of control. Yeah, this one's been tapped. So let's go ahead and delete it here. And then let's look at our naked weeklies real quick. And I believe that one has been tapped now as well. Yeah, okay. We can get rid of that there. Of course, this is a naked weekly, but the week just started, so we are not going to be marking this out yet because the week just started. Let's go on our one out. Yeah, okay. All right. So that is about it for Solana. If we can hold the back test right now at around 198, then I do expect us to come up to 213. SFP of 211 into 213 resistance. If we fall back inside of this volume profile right now, then we can pull a Fibonacci from our lows, not our range lows or not the crash lows, but the range lows after the crash ended to the highs that we just made today. And you can see where's our golden pocket going to be coming in at the bottom of the pitchfork band. So not only do we not even need to pull a theoretical golden pocket, we actually have local support right now for Solana at about 186 to 185. And that is going to be pitchfork band / golden pocket. Do we have any other confluence there? We can look right now. Do we have any weeklies there? We do have a weekly just above that at 188, let's say. And do we have dailies? No dailies there. No naked monthlies. No naked weekly. What? Okay. So yeah, that would be the area of 185 to 186, just based off pitchfork trading. Because if we fall back inside of this volume profile, I expect us to move down at least to backtest that area. But that's about it for Solana. I will keep you guys updated on Solana. You can always ask in the Telegram, in the general tab of the Telegram. You can always ask me for updates on the coins. If you guys are interested, I will do my best to keep you guys updated. But for now, we'll go on to Sui. With Sui, Sui is, guys, once again, just chopping around. Most of these coins, we're chopping around, forming a range within pitchfork bands or within, bigger volume profiles here since the crash ended. So the market is resetting, kind of rebalancing here, trying to figure out a direction of more macro direction on price action, whether it's going to continue bearishly after the mega crash or if we're going to see a bit of a reversal, at least to make a decent relief rally. So with Sui, you can see the chop around the pitchfork band, which is usual, but we are kind of rejecting that pitchfork band today, the top of the pitchfork band today. And it is also the value area low of a much larger range that we lost. So let me clean this chart up here, guys. And I will turn off our small range, our local 2-week long range. But yeah, we have lost our macro volume profile that does go back to about November of 2024. So for about a year now, you can see after losing that profile, we are in the process of back testing it to see whether if we reject, I expect this to come down potentially even to the pitchfork midline at around $1.93, $1.94. But at least I would expect if we're going to reject this overall area of the back test of the value area low and the pitchfork band that we're seeing right now, you can see on the 4-hour chart, we've rejected that band a couple times now. And today we attempted to break above it, but now we're falling below it. So it's sort of like a low time frame failed auction breakout of that pitchfork band. But if we start to continue to drop here, then I would at least expect us to come down to take out our lows of the local 2-week long range at around 228. And if we can kind of chop around here and kind of maintain and get above the pitchfork band and that local value area low, then I would expect a shot up to take out the highs of the range around 301. So let's go ahead and turn on some of our levels here first. Let's look. Yeah. We'll turn on that volume profile of the 2-week long range. And let me turn off the large volume profile. You can see, yeah, we also rejected the value area high of our local range, our local 2-week long range today. And once again, if we do reject the value area high of the local range, it's the value area low of our macro range, then we're probably going to continue pushing down to take out those range lows. And we also saw a sort of swing failure pattern of Tuesday's highs here. Last Tuesday's highs, we saw a swing failure pattern of those highs. Now, much like Bitcoin, much like Ethereum, much like a lot of the coins from last Wednesday, we had a kind of a macro bottom last Wednesday, or a weekly bottom on Wednesday there. And there is the potential of that multiple 1-2 impulse continuing to push up here. So we do not really want to break. And I would say, let's see, we have our 1, 2, 1, 2, 1, 2. This could be your big third wave here. And within the third wave, you have 1, 2, 3, 4, 5. So if we're going to pull that Fibonacci from the low of 3 to the high of 3, if we hit the golden pocket below us around 256, then it's going to invalidate that impulse. Let's go with our wave 4 targets. And right now we are bouncing from the 0.5 Fibonacci, which is the kind of the final area you want to bounce from. So if we can hold this local support, then we are going to continue pushing higher to break the highs from earlier today and continue to see those 4-5s pushing up and potentially even pushing up to take out your range highs around 301. Let's go ahead and turn on some of our support, our levels here on the chart. So no naked daily. We do have that naked monthly that is also below these lows. Now, I believe with the wick it was taken out, but I'm kind of I left it on the chart even though it wicked through it with a crash. Naked weeklies. We do have a fresh naked weekly point of control down near the value area low of our 2-week long range. So, and then you can see that that point of control is also pretty much right where our value area low is. And because it's so close to the liquidity of last Wednesday's lows, I would expect us to continue wicking down. If we reject this value area high now, I would expect us to at least come down and take out last Wednesday's lows at 234 and see sort of an SFP at the value area low at your naked weekly POC, and then you might be able to get a push up. So that would be a local long position for me, is the SFP of last Wednesday's lows into your value area low, naked weekly point of control, and point of control of 2-week long range. There. Let's do this. Okay, that's that. And let's go ahead and turn on some of our other levels, naked dailies. We also have a naked daily point of control that's right there as well. And a daily level that's right there as well. So that is definitely your local support level to the downside with all of that confluence in there. That is if we do confirm the rejection and hit the golden pocket around 255, 256. If we hit 256 golden pocket, I would probably be expecting a move down to the bottom of the range. Reject, and think about it in terms of volume profile trading. Reject the value area high, you have a high likelihood to continue down to POC. But because the POC is so low, it's pretty much at the value area low. We would just probably see a full rotation of the range of our local 2-week long range. That's if this kind of settlement of the market is going to continue with Bitcoin, with some of the other coins. And then above us, if we are able to kind of break above the value area high of our range today, we do have those naked weekly POCs and naked daily POC that is just above us at 279 to 281. And if we pull a Fibonacci from the range highs to the range lows, and we turn on our 786, okay, 786 is going to be a little bit higher. Let's look at the golden pocket. And golden pocket's a little bit lower. We did not hit the golden pocket today, though. We actually front ran that golden pocket, at least on Coinbase. We did front run that golden pocket. So that actually makes it a little bit messy here, because we could come up one more time, reject golden pocket, and that actually might create your 4-5s coming up to 281 to 279. So remember, volume resistance is the most important. So between 279 and 281, just be aware that we do have some volume resistance. It is right above the golden pocket. We often do see times where we wick the golden pocket, hit resistance above, but close your daily or your 4-hour candle body at the golden pocket and see that reversal. And it would be a fake out of the value area high. So a little bit more advanced trading there. A little bit, you'd have to look for some bear divs there, maybe bearish money flow. If you're a newer trader, that's definitely a risky kind of setup to be looking at. So I wouldn't be taking that. There's easier setups that we've already looked at today on other coins. But that's kind of what I'm looking at for Sui. So going on to Say here, Say is chopping right around our pitchfork midline, and we have the small range of 2 weeks as well. After the big crash happened, our small range of 2 weeks. We did have our resistance above us being that golden pocket pulled from the range highs to the range lows, golden pocket area, swing failure pattern of these internal highs right before this last big push down. So there is internal liquidity, stops resting above there. And I believe there was, let's see, let's go on to the daily chart. Okay, looks like I thought there was some other resistance there, but it looks like there might not be. Yeah. All right. So if we do get up to that golden pocket, that's the only thing above, and it would be breaking out of the value area high. So you'd have to be aware of a fake out of the value area high into that golden pocket, and then the rejection. So let's throw that there. Fake out of the value area high into the golden pocket, and then if you fall back inside the value area high, the volume profile, that could be considered a short. But to me, that's a risky short and pretty big stop loss. So if we bounce here, hit up into that golden pocket, and then fall back inside the volume profile, that could be a short position where you open short upon the reacceptance back inside the volume profile. After rejecting value area high, stop would go above that value, that golden pocket rejection. And in that case, we could pull a golden pocket from the lows to the highs and look for continue your TP level. But I'm not even actually going to talk about that right now, because first of all, it's speculative, and second of all, it's not the best trade setup. You'd have a pretty big stop loss on that wick. So I think there are better setups. For now, I would be just trading the range until it breaks here. If you do come up to value area high just above, reject that. Always remember range trading. Look for shorts near the highs of the range, longs near the lows of the range. We did see, of course, the bear divs here. Triple drive of bear div on the hourly chart. Bear divs locally on NAMI, and also bear divs on the money flow here. Actually, no, not bear divs on the money flow. The big thing to me on say locally is this pitchfork midline actually anyways. And yes, we are chopping around the pitchfork midline. It is a high time frame pitchfork midline. Let me zoom out onto the daily time frame. So what we've been looking at on say overall is we were looking at for the past few months after we were able to, this was our accumulation range that we were seeing at the bottom of the move. You had your model 2 accumulation, tap 1, tap 2, tap 3, accumulation, and then you had your big expansion all the way up to the upper pitchfork band. Now, that upper pitchfork band in here at 38 cents was also a macro log golden pocket. And if you guys remember a few months ago, we longed the back test of that range and the back test of the pitchfork here. We took profit up here. But because we could not break that band, major rejection, major rejection, major rejection, major rejection, 4 major rejections of the top of the pitchfork band. And then we lost the pitchfork band and started rejecting the bottom of the band here. We expected a move down to the midline. With that historic crash that happened, we actually broke the midline down, but we're chopping right around the midline. So because we're kind of in a stasis pattern right now, I do think that it's a little bit choppy here, a little bit confusing here on whether we're going to actually start to reclaim the midline and make a push back up to backtest the value area low of this upper range, coming in around 27 cents, 27.5 cents, or we're going to start to continue dropping back down and coming down. You know, we did bounce from the value area low of the accumulation range. Here you can see that value area low is where we bounced from. But we could take out the range, the crash lows again into a fresh daily level at 16.6 cents. So just be aware. I wouldn't be surprised if this kind of bearish momentum continues and we do come down to make new lows at 16.6. For me, say is not the best thing to trade right now because we are seeing some uncertainty around our macro pitchfork band, which, by the way, was respected so nicely. Rejection from the pitchfork midline, come down to the lower band. Bounce, nice strong bounce from the lower band, move up, back test the midline, and then come up to the upper band. So this pitchfork has been highly respected, but right now we're seeing a bit of confusion around the midline, which does happen when macro events like macro crashes like this happen. So just be aware. A little bit messy here. You know, your money flow on the daily looks like it's about to roll over and come out on Market Cipher B. Your momentum also looks like the same thing. For me, I'm not looking at any trades on say here, or if you are looking for trades, I would just trade this local range since the crash ended until you get some clarity. Let's go on to XRP here. Now, guys, XRP did have a bit of a pump today as well. And XRP, you can see our local range that we were talking about on all the coins that happened after the crash. XRP is now starting to break out of the value area high of the range, and we're even breaking above our anchored VWAPs, or we're attempting to right now. And if you guys remember Friday's live stream, I talked about these 2 key anchored VWAPs, which we rejected from on the dead cat bounce. After the crash, we rejected those 2 anchored VWAPs. Saw a pretty aggressive move down. But now if we can reclaim these anchored VWAPs, then I do think we can see a move potentially up, pushing higher. Let's go real quickly onto the Coinbase chart, where we do have some analysis that we did on Friday, and we were talking about this descending channel. And what we talked about is if we could break, we did bounce from the bottom of the descending channel here. If we could break above the midline, which we were rejecting from at the beginning of the week, you can see it was the value area high. It was our channel midline. Actually, over the weekend, and we did bounce from our support level, by the way. We called this support level out. It was the value area low in the golden pocket. Now, if you remember Friday's live stream, I did say I was uncomfortable with how we didn't take the lows. Those were Sunday lows. You can see Sunday, October 19th. I was Not comfortable. We didn't grab the liquidity, but we did bounce from our support that we actually had laid out ahead of time. And now we look to be in some nice local impulsive price action, and we're even taking out the range highs of our range and not swing fellow padding them, but staying above them, seeing chop above them. So to me, XRP is looking pretty bullish here, at least to continue locally to the upside. Money flow also looks very bullish here on Market Cipher B. NAMI is just crossing back into the green here. You can see just crossing back into the green down here. And it's likely that we're going to continue to the top of the channel now. And you can see the top of our descending channel is coming in around that 786, around 281. Let's go back to this XRP. Yeah, and that is, 283. It's a little bit different on Bybit than on Coinbase. But that is going to be the value area high of our macro range that goes back. Let me hide this. Let's clean this chart up here. That is going to be right around the value area high of our macro range that goes back to December of last year. So about a year-long range. And because we're reclaiming the POC of that range, we could work our way up to the value area high of that range. Let's just bring this all the way. And you can see your anchored VWAPs kind of in that box as well. Let's turn on some levels. Let's look at some levels here. Yeah, that naked daily we have at 281, which is at the top of the descending channel. If you guys remember the Coinbase chart I was just showing you. So I would say between 281 and 286 is a major resistance next for XRP. Yeah, definitely. Okay. So let's go ahead and go back to the Coinbase chart. And we'll just mark out that naked daily point of control here. Let's make sure it's the same on Coinbase. Yeah, right at your 786 there. You can see we have the naked daily point of control right at the 786 and the top of the pitchfork or top of the descending channel. And then if we look at our daily levels, we have a daily just above it at 287. And let's go ahead on Coinbase and pull that macro volume profile. Yeah, so that would be the next major area of resistance for me. Value area high of our macro range, a daily level, the 786, the top of the descending channel. Now you have to remember this descending channel here is of the entire push down that we've been seeing from the majority of the year. At least a couple months, I should say. Since July. We'll make that purple. This is going to be value area high. $281 to $288. Okay, and then as far as support to the downside goes, we do have some naked weekly POCs. Let's go on to our hour-long chart. If we look at this range here and we turn on some of our local levels, we do have a naked weekly POC. We have a fresh weekly level around our range POC of the past couple of weeks, but it's also our POC of the macro year volume profile that's a year long. And we also have a naked weekly POC down there as well. So macro support, let's pull that here. And that's also probably going to be around your golden pocket. Yeah, golden pocket's just below that. Okay, now that is a support level between 240 and 239, let's say. Nice support level between 240 and 239. But because we're breaking out of the value area high of the range, you can see it was acting as resistance last Monday. We got a nice three-wave correction down, making a higher low, and then now we're starting to impulse up again here. So we do have to say market structure locally should be a bullish bias. Because of that, and because we're breaking out of the value area high of the range, let's turn on our naked daily points of controls. And we do have a confirmed naked daily point of control. Let me just double check this. We do have a confirmed naked daily point of control, a fresh one at 254, which is also the back test of your value area high. That is from this Friday, So because we're breaking out of that range, oftentimes you will backtest that range to confirm that it's going to flip to support before continuing pushing up higher. And very, very locally, I would say this could be your nice support level in here. Naked daily point of control, value area high. Around 254. Let's just say 254. If you can hold 254, then we might get that shot up to 281 to 288. If you break down below it, yes, we do have some naked dailies along the way at like 247.5, but I would really be expecting a move back down to that 240 region. So that is about it for XRP. Lastly, let's go on to Chainlink. Now, guys, with Chainlink, you can see we did have a local resistance marked out here. On Sunday, we did have a small rejection from that resistance, but we pushed above it, and we pushed above our pitchfork band. So that kind of was a crappy resistance that didn't work. It was local. We kind of were fishing around on Friday for local range trades. But we are coming up to the value area high of the range, and you can see we did not swing failure pattern Monday, October 20th highs. And we're chopping just within the band. Guys, I've talked about this over and over on the channel, but within these pitchfork bands, you often see the ranges inside and around the bands. And because we did kind of lose the pitchfork midline, we've now come down to the bottom band, and we're just chopping within that symmetrical triangle around the bottom band here. Kind of seeing this symmetrical triangle build here around the band. For me, I wouldn't be trading too much of this, except if you're going to see swing failure patterns. You know, if swing failure pattern at the last Monday's highs around 19.19. If you don't swing fail pattern that, then I do think you're going to come up to 20.7, which is the macro value area high. Now, remember, this range is of a 2-year long range. And since we've dropped back inside our macro value area high, we've formed a range underneath it, in some ways finding reacceptance back inside your macro volume profile after seeing a failed auction breakout on the daily time frame above it. So that could be considered bearish if you get back up to 20.7, backtest that and reject, that means we could be coming down to 14, where you have your macro POC and the bottom of your pitchfork. If you guys want in-depth analysis on this, go check out Friday's live stream. We went pretty into depth on this, but within this little range here that we've been seeing for the past couple of weeks, I'm not really too interested in trading anything on Chainlink unless it's a swing failure pattern. So a liquidity grab of last Monday's highs into the value area high of our local range, I would be interested in taking that as a short. Also, if we do come down to the value area low of the range, you can see it's near the bottom of the pitchfork. And let's pull a golden pocket from last Wednesday's lows to the highs that we made today. Okay, and we'll look at our 786. Yeah, your 786 is going to be down there. So that could be a local support level if we continue dropping here now. But once again, just like the local resistance that I showed you guys when we first clicked onto Chainlink that didn't work too well, This is a very local level that if we do get to start to get volatility, it could get busted through real easy. So be aware if you're coming down here, you want to see local bull divs coming into that, and it's a local intermediate, local small support level. So I wouldn't be risking the farm on that. You first of all, you should always use proper risk management, proper position size calculated ahead of time. But just be aware that if big volatility kicks in, we could bust through that so quickly. Likewise, we could also bust up through the highs of the range and not see the SFP so quickly and continue higher. So for me, I'm not really interested in any trades here on Chainlink, but that's kind of the analysis for Chainlink today. We can look at the local levels here. Weekly, yeah, we do have a weekly down there as well. So actually, that's actually really nice local support. 786 pitchfork bottom. So we'll actually type this in pitchfork band. $786 pitchfork band value area low weekly. Okay. And let's see if we have a daily in there as well. Actually, that's shaping up to be a pretty nice confluence of support. Down between 17.3 and 17.2. So daily is in there, weekly is in there. Let's see if we have any volume levels down there. Nope. No. Yeah, could look for a local scalp long opportunity from that area just because there's so much confluence down there. But that's about it for today, guys. Please like the video. If you got anything out of this video at all, please like the video. Please subscribe to the channel. Remember, BYDFI is going to be having a new trading campaign, I guess I'd call it a campaign where you can earn bonuses and you can earn up to 80% of a reward pool just based off the celebration of me hitting 3K subscribers on YouTube. So if you're interested in that, join with the affiliate link, join BYDFI with the affiliate link in the link in the description below. You can get access to a lot of cool perks, access to the Telegram. And thank you guys so much. I will be streaming tomorrow at my regular time, 3 p.m. Eastern Standard Time. Hope to see you there, and you have a good one.